Well, joining us now to share his commentary on the day's market performance is Brendan Capstick from Nedbank Private Wealth. Brendan, hi. Good to chat to you on a business lunch. And you would have heard in our business bulletin, Roxy making headlines today.
Yeah, good afternoon. Thanks for having me. Traditionally also known as the old capital appreciation. Interesting business, point of sales, and of course, fintech payments business. So interesting business. Some good solid results on that end. The payments division really growing strongly around 23%. It's a little bit small from a market caps point of view. It's only 2 billion, but I think interesting business at these levels. Not trading on a demanding multiple around 10 times. So yeah, good business. It seems like they're really gathering momentum in that fintech space.
Yeah, up over 3%, which is quite something for today. And then I'm afraid Exxaro also making news headlines too. Your thoughts?
I saw that pre-close message from the CEO, of course. Down 5%, unfortunately. On Exxaro stable, they've had a couple of headwinds, weaker demand and oversupply in that space. They've really indicated that their sales and their guidance will be in line with 2024 numbers. So market really not happy with that at these levels. And the basket prices on iron ore and thermal coal also down on 2024 numbers. They've also had operational headwinds through the Transnet offtake. So that's really not playing well for Exxaro. But if you look at Exxaro as a business, still sitting with quite a bit of cash, around 18 billion rands worth of cash, and a dividend yield of 9%, still attractive. Management's been prudent and buying back shares around 2% of market cap. Really tough environment, I think, for them if the basket price doesn't move higher. So gives optionality, but a tough space at this point for them.
Yeah, a very tough space, I'm afraid. But on a positive note, Shaftesbury making some gains as well. They've got big plans, I think.
Yeah, 100%. If you look at that Covent Gardeners, the West End assets, really dynamic central London assets that they've really reworked in that front. They've also indicated that leases will be increasing by 9%. And it just shows you that the property market can be dynamic if they invest in the marketing, as they've indicated to. One interesting one on Shaftesbury is that the loan to value is only at 17%. If you compare that to the peer group, as well as their loan to value figures from 2024 was at 28%. So they've been paying down debt, really strong occupancy, and also it provides them with a lot of cash and functionality on that end. So positive news for Shaftesbury, strong update.
Yeah, you can see it. In fact, I'll be chatting to Sirius Real Estate shortly about what's happening with them. And it's a similar picture as well. It's sort of this trend that's been emerging. And then Equitas Property, something that I think is a good stock. It's something that's been bubbling under since, I think I've been tracking it since 2012. Brendan, what are your thoughts?
Yeah, I think it's similar to Eastern Europe play. I think they've got quite a dynamic management team, also a dynamic set of assets that they work in. I think that market's actually been quite strong on the Eastern Europe side. So similar story on the European property end. There've been rate cuts and rates being lower on that end. It's not something we look at closely, but I think that whole that Eastern Europe, UK area of the market still very interesting.
Yeah, in fact, you can see there on that graph that climb is quite substantial, so don't let the latest value fool you whatsoever. Right, not your stock pick just yet. What else are you watching today?
Yeah, I think, just on our local front, we saw financials really firmer today. We had a good day yesterday, as you mentioned. I think financials are higher mostly. That's on the back of that strong Standard Bank update we saw. We got PGMs pulling back now, with the platinum price probably down 2.5%. But in the bigger context, these gold and platinum miners are still generating a lot of free cash flow. So I think if you understand some of these businesses, very interesting. And I think where we're watching as well as the US market, you're expecting this US Fed interest rate cut. So if you look at poly markets, they've got an 89% probability that we'll have a 0.25 or 25 basis point interest rate cut in this month of December, which is important for markets and risk assets. You've mentioned the pullback on cryptocurrencies, and it's a higher beta asset class. Yes, you mentioned Japan, interest rate decision possibly, but I think risk assets are really hinged on that US market on that front. So Yeah, that's broadly. We need to have some more clarity on the US before risk assets start rebounding.
Well, that's the thing. Do we need that clarity? Because we've also got the Bank of Japan as well. They're very cautious. They may be doing exactly the same thing because they're concerned about the yen. Are you finding at the moment it's just all around caution until we know where we are?
It is. I mean, you saw really a washout out of higher beta risk names in November. We had a weak November across the board, especially in the international markets. And now it's kind of just capitulated into the cryptocurrency space. I looked at Bitcoin today again. Scary to see it 7% down on a year-to-date basis. But again, the market is looking skittish. If you look at the gold price, still up at 4,200 plus per finance. So indicating that there is definitely risk off sentiment in the market. I think it is to do with growth concerns to the US and other developed markets. The irony is that the local market has been exceptionally strong. The JSE is up north of 30%. You mentioned the GDP figures pretty much in line, but hopefully that gives the SARB a bit of impetus to further cuts down the line.
Gosh, let's see what happens. We certainly do. The rand, though, in this little range it's going at the moment, it seems to be very strong against the dollar. And again, it's that caution.
Yeah, I mean, if you look at the dollar index, DXY, it's below 100. It was north of 100, so indicating dollar strength. It's moved back. It's at around 99.3 or so. So that dollar really is hinging, as I mentioned. Dollar weakness will come if the rate cut comes from the US side, and that's really feeding into our currencies as well. We've always been seeing this net buyers of our bond market. We've seen some positive momentum on our credit outlook for South Africa, as you're aware, and of course, that new inflation target. So again, we've had international buyers coming in to buy our bonds, and that's been really a driver for our currency. On the other crosses, I think our rand actually has been strong against the euro and the pound. So on that front, I think it's good for our trade balances if our currency remains strong.
Right, hold that thought. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
Black Friday spending, I mean, incredible amounts being spent, way up on last year. A lot of it is online. Look, they're well positioned online, but I think when their results came out, I think what I liked about Walmart is that a lot of home brands, and I think with consumers becoming very picky and not really governed by historical norms or legendary products, I think they're well placed. So I like this business. I think this together with Home Depot are going to be my choices for next year.
I like it, and it's actually, to let on to David's stock, to say that it's a Walmart with a AI boom in it, so there's definitely the AWS platform is fantastic and continues to grow, and I think there's a big tailwind behind it. They will have a bit of a capex in the short term, but I think long term, their investment in robots is actually going to help them become more efficient in the e-commerce business. So I really think that it is going to be resilient in a turbulent AI market.
Right, Brendan, those are the two stock picks there, the two big retailers, I suppose. Let's start with Walmart. They're in the country now. Your thoughts?
Yeah, again, it's probably with the theme. If we had Black Friday last week, Friday, of course, and Cyber Monday yesterday, I read, in the US, consumers spent $9.1 billion on Cyber Monday. So who says the consumer is not in a good space? Probably leading into this Walmart discussion. Walmart, probably more traditional, still the largest global retailer, surprisingly, with their physical footprint. So what they're doing is they're matching that e-commerce and omni-channels with their physical footprint for delivery. So really revamping that business into more a modern, let's call it omni-channel, delivery business, which is very, very good. It's done 23% on a year-to-date basis. The only thing I would mention on Walmart is that it's trading at a forward P of 37 times. The S&P is around 23 times forward. So not too cheap at these levels, but definitely a business model that's been adapted.
Right, from Walmart to Amazon. That's an exciting stock. Can't say it's not.
It is. Of course, of course. Now, Amazon is a massive company. I mean, it's 2 trillion market cap, more than double Walmart's market cap. So again, it's one of the Magnificent Seven that's lagged. It's down, well, it's up only 6.6% year to date. So the one in that Magnificent Seven that's been the laggard. It's a combination of two, where you've got the e-commerce and omni-channel traditional, let's call it online businesses, retail business. And of course, you've got the kicker, which is the AWS, or Amazon Web Services business, which provides cloud computing platforms for developers, the AI strategy, and I think that's where they call it growth acceleration will come from. So that's the difference. Provides you the AWS asset, and that's growing quite strong. So really good story. I think it's also offering a good entry point here, Amazon.
Right. Moment of truth. What is your stock pick then?
Yeah, from international retailers to local retailers, I'm picking Mr. Price, locally listed apparel retail. So again, they, what you're just mentioning, they are down 28% year to date. You know, we've had foreign buyers on fixed income, but not on a lot of our SA Inc. names. But if you look at this, it's offering a forward P around 13 times, so it's quite cheap. Recently, I had an update. A decent mid-single digit metrics growth across segments, but I think where we're seeing you know, upside here is that it's really cheap. There's a seasonal trade. I just mentioned the Black Friday and the Cyber Monday stats. So I think from these levels, if you get any foreign buyers or any increase in these retailers, I think this is a good entry point for Mr. Price and a quality a local SA name.
Yeah, retailers doing very well at the moment. Brendan, thank you so much. Good to have you on Business Lunch. Thanks for taking the time to chat to us today. Thank you. That was Brendan Capstick from Nedbank Private Wealth.